Welcome back to another episode of Last Week in Crypto. I'm Taron, and these are some of the stories making headlines in the world of crypto. The world of digital assets is dynamic, fast-paced, and continuously evolving. As the US stands on the sidelines, tangled in regulatory debates, Asian economies are seizing the opportunity to take the lead in Web3 and crypto. Our journey today will take us on a global exploration from the West to the East, where we will observe some of the remarkable disparities occurring in the world of cryptocurrency. First up, we'll delve into the contrast between the Asian embrace of cryptocurrencies and the resistance they're facing in the United States. The US, wrapped in regulatory uncertainty and debate, seems to be slipping behind as Asia leads the cryptocurrency charge. Hong Kong, Singapore, South Korea, and even Dubai are laying down the welcome mat for digital asset companies, shaping the crypto narrative on their own terms. Next, we'll navigate the intriguing developments in South Korea, a nation caught in a unique power struggle. The clash between the Bank of Korea and the Financial Services Commission marks a significant transition in the nation's crypto market. As new bills pass and officials adopt transparency, South Korea's cryptocurrency scene is morphing from a Wild West into a regulated and accountable sector. Finally, we head to Hong Kong, a burgeoning crypto powerhouse. Awarded as the most crypto-ready jurisdiction worldwide, Hong Kong is making strategic moves towards becoming a global hub for digital assets. They're not just inviting crypto businesses, they're urging them. Surprisingly, even China's stance on crypto is subtly shifting, as evidenced by their national television coverage. But before we get started, I would ask that if you enjoy this video, consider hitting that thumbs up button. It is one of the best ways to support me and this channel. And make sure to also hit that subscribe button and turn on notifications so as not to miss any future Last Week in Crypto news updates. Right, having got that out of the way, there's a lot to cover today, so let's just dive right in. As Uncle Sam tightens his grip, Asian cities are opening their doors to digital asset companies. The US is tying itself in knots over cryptocurrencies. Is it a security? Is it a commodity? Who cares when the rest of the world isn't waiting for them to figure it out? Asia's grabbing the crypto bull by the horns. Conversely, the US is rubbing crypto platforms up the wrong way, throwing fines and lawsuits left, right, and center. Their loss is Asia's gain. But not everyone's on board this crypto trend. India, for one, is hitting hard with taxes and penalties, causing a mass exodus of digital assets. It seems the future of crypto is heading to the Far East, and Hong Kong is at the front of the pack, rolling out the red carpet for the crypto industry with more than 80 companies ready to set up shop. Hong Kong's welcoming regulations have already attracted big-name players like OKX and BitGet. Japan and South Korea, both betting big on blockchain, are learning from past mistakes and investing in a future centered around Web3 technologies. Singapore is going for a cautious approach, focused on risk management. However, they're being quite clear. Being a tech powerhouse doesn't necessarily mean embracing cryptocurrencies. Basically, it seems like they're being cautious and observing how other jurisdictions handle cryptocurrencies before making any bold moves. Nonetheless, they continue to exhibit a welcoming attitude towards cryptocurrencies in anticipation of broader adoption. And then there's Dubai, which is attracting exchanges with a favorable regulatory environment and making moves towards creating its own Islamic coin. There's so much happening in the world of crypto in Dubai. This could be the basis for a whole video all on its own. The bottom line is that Asia isn't waiting for anyone, it's shaping its own crypto narrative. The US is infighting over the status of crypto, whether it's a commodity or security, is causing it to miss out on rapidly growing industry. It's fascinating to observe how Asia has wholeheartedly welcomed digital assets as a crucial aspect of the future of technology, while the US wastes time on endless debates. As the US continues to demonize the crypto space, its aggressive regulations and lawsuits aren't solving anything. Instead, they're driving digital asset companies straight into the welcoming arms of Asian cities. If the US doesn't get its act together, it risks being left behind. President Biden's recent proposals to tax digital assets and close tax loopholes used by crypto traders are a bit of a mixed bag. On one hand, it's refreshing to see some action on the regulatory front. On the other, it's pretty rich to propose taxing an industry whose potential has been massively hampered by ridiculous regulatory actions and uncertainty. And while negotiations to raise the debt ceiling continue, the impact on crypto markets remains unclear. We've seen the resilience of these markets despite the threats of lawsuits and regulatory crackdowns. And again, I find myself saying, maybe it's about time the US accepted the inevitable and embraced the digital asset revolution, rather than forcing it all to the east. South Korea is in the throes of a crypto power struggle. In a push to regulate its booming cryptocurrency industry, the Bank of Korea and the Financial Services Commission are butting heads over who should take the wheel. The Bank of Korea argues that the implications of cryptocurrencies on the financial system's stability warrant their involvement. During a recent meeting at the National Assembly, the two sides disagreed over the central bank's right to access data from crypto platforms. The FSC was hesitant, saying crypto isn't widely used for payments. But the Bank of Korea's deputy governor hit back, emphasizing the significant impact of the crypto market on the financial system. The FSC finally agreed to the Bank of Korea's request for data access, but it may be safe to assume that this power struggle isn't over. South Korea is home to one of the world's biggest crypto markets, with 10% of its population investing in crypto. The central bank's concerns may not be unjustified. What this power struggle clearly signals is that the era of unregulated crypto markets is rapidly coming to a close. And we can see more evidence of this in the news that lawmakers have unanimously passed a new bill that makes the cryptocurrency scene a whole lot more transparent in South Korea. From 2024, high-ranking South Korean officials will need to reveal how much cryptocurrency they're sitting on, no matter how small or how big that sum might be. This is a big leap from the old rules where only assets like cash, stocks, and bonds above 10 million won needed to be disclosed. There are also investment limits imposed for officials involved in the crypto sector. This overhaul comes in the wake of a scandal involving a former lawmaker over hidden crypto assets and transactions. It's a new day in South Korea's crypto landscape, one where transparency rules supreme. What's unfolding in South Korea's cryptocurrency scene is as fascinating as it is pivotal. This power tussle between the Bank of Korea and the FSC isn't just about who calls the shots. It's a reflection of the increasing influence and importance of cryptocurrency on the global financial stage. And the new bill that mandates transparency from high-ranking officials is a testament to this shift. It's a timely and necessary move following the scandal involving a former lawmaker's hidden crypto assets. This isn't just about disclosure, it's about restoring public trust. This all underscores the prevailing sentiment. The Wild West days of cryptocurrencies are drawing to a close. With regulatory reins tightening around the globe, South Korea isn't exempt. What we're witnessing is the maturation of the crypto market. Gone are the days of reckless speculation and unregulated trading. As the dust settles in South Korea's power struggle, it's clear that the new era of cryptocurrencies will be marked by transparency, regulation, and accountability. Hong Kong's rivaling Switzerland for blockchain startups and ranking third in the world for crypto ATMs. We're witnessing a crypto revolution, and Hong Kong is at the forefront. Hong Kong has just been crowned the most crypto-ready jurisdiction on the globe, thanks to a study by Forex Suggest. This title is earned based on blockchain startups per 100,000 people and the number of crypto ATMs proportional to population size. What's more is that there's no capital gains tax on your crypto earnings. As of June 1st, new virtual asset rules come into effect. These new rules could help to make the city a global hub for digital assets. And in a surprising turn of events, China's central television shed light on Hong Kong's upcoming virtual asset regulations. We're talking about the largest national broadcaster in China, bringing crypto into the mainstream conversation. The Securities and Futures Commission of Hong Kong has finalized its licensing scheme for virtual asset service providers, and come June 1st, licensed platforms can legally sell major cryptos like Bitcoin and Ether to retail investors in Hong Kong. Existing platforms must secure a license within 6 months or kiss the Hong Kong market goodbye. Binance's CEO Changpeng Zhao suggested that this shift in attention could hint at the beginning of a bull run in the crypto market, but we'll have to see about that. It's fascinating to see Hong Kong's recent crypto-friendly stance, especially considering China's historical harsh restrictions on cryptocurrency. By embracing crypto, Hong Kong is clearly showing the world that they're not just open for crypto business, they're actively encouraging it. This assertive leap into the crypto world could significantly influence the global crypto landscape. And the CCTV's unexpected coverage on this issue is indeed intriguing. Given their vast reach, it's a significant move that can't be overlooked. It appears that China might be subtly altering its narrative on crypto, which is good news for the entire crypto sphere. But given that Hong Kong is launching its own retail central bank digital currency, the eHKD, there are grounds for concern. But if we forget about that for now and just focus on the positives, and if this is indeed a hint at China's future relationship with crypto, the implications are staggering. We could be witnessing the dawn of a new crypto era. Let me know in the comments what you think about any of the stories I've covered today. I'm always interested to hear what you have to say. You can find me on Instagram and occasionally on Twitter. The links to my socials are in the description down below, as well as a couple of referrals. Thank you so much for joining me, and I look forward to seeing you in the next one. All the best.